Good morning, traders. John Caruso coming to you here for the morning of June 30th with your currency outlook for today. Taking a look back early on this week at some of the data, we did see a miss on durable goods down 1.1%. The market was looking for down 0.4%, so we saw some disappointing action there. However, we did see the following day on Tuesday consumer confidence accelerate to 118.9 versus expectations of 116.7. And then yesterday, of course, we saw the GDP, the final revisions for Q1 actually revised higher to 1.4% when the market was looking for 1.2%. However, we've seen some disappointing action in the U.S. dollar versus the euro trade this week. We have seen the U.S. dollar down over 200 points here on the week. And inversely to that, the euro has traded upwards about 250 to 270 points up in that range throughout the week. We did see Yellen actually on Tuesday express some concerns about the falling levels of inflation, and they are prepared to act if things continue to get worse on the inflation front. She also did mention that she thought asset valuations, i.e. the stock market, did look rich at present levels. So that's part of the reasons why I believe we've seen kind of a bumpy ride in equities here today. We saw the S&P down about 1.5% at one point yesterday. However, we have recouped the bulk of those losses here in the early going here this morning. We also did hear from Mario Draghi. Mario Draghi took a slightly more optimistic approach than Janet Yellen did. Very optimistic as far as Eurozone economic conditions are concerned. We have seen a lot of their growth figures and a lot of their economic data actually beat expectations as of late. However, they're having the same problem that we're having here in the United States. They're actually experiencing low levels of inflation. However, Draghi did kind of ease the market's concerns and mentioned that he felt the low levels of inflation were simply temporary. The market took that as a cue to rally the euro as expectations for the Eurozone's the Eurozone's quantitative easing program, expectations that might get cut and trimmed back in December, which is naturally bullish for the euro currency. So the euro currency kind of took Draghi's speech and they took that to the bank and they ran that up to the top end of the range. We saw, I believe the high yesterday was 114.93. I do have the euro currency immediate term overbought at present levels here. So if you're bullish on the euro, now's probably not the time. You wait for a little bit of a pullback to the bottom end of the range. I'm looking for a pullback roughly to about 113.5 to potentially 113 here in the coming weeks. But of course, we're going to continue to measure the data as that flows in for weeks to come. So looking at the dollar right now, trading 95.71. I do have some longer-term support in at about 95 to 94 94 and 3/4. So kind of keep an eye on those levels right now for oversold signals in the U.S. dollar, even though we do have it, in the immediate term oversold at the present moment. So, but that doesn't mean we can't get more oversold in sessions to come. Looking at the British pound is pointing down this morning. Again, from a technical perspective, we've been overbought in the British pound. We did hit the top end of the range upwards about 130. The low end of the range comes in down around 127. So if you're bullish on the pound, you don't want to be buying at the top end of the range. You want to naturally look for a pullback. The pound's down about 20 ticks this morning, reacting to some softer readings on the UK GDP numbers that were released in the overnight. So that's really all I have for you now. Feel free to reach out to me at the trade desk. I'm going to be out on Monday and Tuesday. And that's it. Everybody enjoy the holiday. We'll get back to you in a couple weeks. Take care.